Welcome to Investors Insights. Happy New Year. Our topic today is New Year, New Thoughts, and we've got a lot to share with you. Keep in mind that the fourth quarter, needless to say, was very volatile, and if you go back and look at some of our other vlogs and watch those in addition to watching this vlog, you will see how our thoughts are connected in things that we're seeing out there in the market. Case in point, in last time's vlog, I mentioned the fact that the support level on the S&P 500 index was around 2,400. We're still seeing that. That's why you need to watch these vlogs. In addition to that, we're looking at our next obstacle or resistance of the S&P 500 having to get through 2,590 in order to go higher. So the volatility is still there, and we are now going to share with you a lot of information in regards to our thoughts for 2019. So on that note, Bobby, you laid out some great detail here that then Trey tied in as to what's really going on here. So talk about that.
Yeah, we've got a few 2019 investment themes and also kind of our wish list. So first, we could see the European Central Bank step in with some stimulus. So the Brexit is not going well. That's no secret. That's really having a negative impact on the European economies. So we can see the European Central Bank take action there. Also, that we expect the U.S.-China trade talks to work itself out. U.S. trade representatives are in China this week. We'll hopefully get some good news there. But China's hurting. Worst consumer spending in 20 years. Their GDP is down significantly. It is down so much we could see the China Central Bank take some action too. So that would boost their economy. Also, we expect our Fed to kind of hit the brakes. So you have central banks around the world stimulating their economy. Ours can't be tightening like they did last year. So we expect them to slow down compared to last year. So also we expect IPOs to be active again.
Yeah, initial public offerings.
Initial public offerings. Obviously with the volatility last year, I think a lot of IPOs kind of stayed calm there.
Yeah. Well, in a previous vlog, actually talked about the strength of IPOs and that people don't raise capital in bad times. Right. So talk about that.
Yeah, and then also energy prices. We expect energy prices to stabilize, supply cut, and then hopefully central banks will kind of boost their economies. And then we can see some of that.
Well, you see, that's kind of the silver lining of a weak global economy is that the U.S. and that's maybe why the Fed got a little over its skis on raising rates, because if you look at the U.S. economy, rates should be higher. Look at the U.S. economy, there should be inflation, but there's not. How is that possible? How can we see a 3+% growth GDP rate in a year and oil prices fall, copper prices fall?
And that is a key point that you're making there that everybody needs to pay attention to.
Right. So it's because we're importing deflation. You see China's economy is really hurting. Well, we import a lot from China. So even though there's tariffs up there, their prices are dropping. We import a lot from Europe. A lot of the global demand, Japan, China, Europe, is falling. And so that keeps prices down. So as an economy, we can grow with no inflation. It's kind of a Goldilocks economy right now, not too hot, not too cold, and that keeps the Fed on the sidelines. Like you said, the Fed can't raise rates to stop inflation. It's not there. They also can't tighten when the rest of the world is weakening. That's kind, and that's at the end of the year. They were kind of had their blinders on. They had a preset plan to tighten no matter what. And the U.S. economy, every bit of U.S. data looked good, but there was no inflation.
Right.
So what are you fighting?
Right. Exactly. And that's been the whole discussion. It's the Fed really on track. And we had debate earlier in the meeting about the fact that when the Fed is making front page headlines, that's a problem. We dealt with that in 2014, 15, and 16, and that's just a problem. This economy is growing. The numbers are looking strong. And so we need to focus on that. Ashley, you brought up some points as well about China.
Oh, yes. When Bobby was mentioning that, the one major reason that we feel personally that the trade talks will go well with the Chinese is that we mentioned on a previous vlog, our economy is much larger than theirs, so in absolute size. But the other key we were talking about this morning, our economy is a lot better balanced. It's like a football team with a good throwing and running game. Most of their economy, or a sizable portion, 33% to be exact, is export-led manufacturing. That's getting killed in the trade war. Our economy is much more of a balance of domestic services and manufacturing. We can take the lick much more than they can. They are really getting crushed in that manufacturing sector.
Yeah, very much so. Yeah. And so the headlines have been China, U.S., tariffs, that's been a cloud over this economy. But that said, is that you talked about jobs here in this this country. Talk about that.
Yeah, in 2019, you're looking for trends. Going back to what Trey said, good data. One thing that's been consistent in our economy is job growth. 312,000 for the month of December, crushed the expected 176. Manufacturing had the largest annual raise in the last 20 years.
Wow.
So we're seeing a lot in that area. And going back to your point,
Yes,
China.
growing manufacturing. You're right on manufacturing. That's a great point. Manufacturing job growth in the last 2 years is 473,000 total.
To the positive.
To the positive, as opposed to the 8 years before that, it dropped 210,000. I mean,
Yeah.
we all kind of anecdotally thought manufacturing was gone in the United States. Nothing's farther from the truth, and those numbers prove it.
Yeah, exactly. And going back to domestic overall, China, we're starting to see job growth there. So it's kind of interesting to see.
To that stimulus point, Bobby was saying that
The Chinese are stimulating their economy. Keep going.
Yeah. And so if they're seeing weakening, they're a top-down driven economy. So they see weakening, they need jobs. They're going to force that through there, and you're starting to see maybe if they're getting scared, they're pushing their jobs up.
Yeah, so you're seeing it there too.
Yeah.
All over the board.
Absolutely. So we've given you a lot of information. You can see how a lot of this is connected, and you can also understand how it impacts the markets, as well as beneficial to your portfolio as all this data and information comes together. It's what we're looking at as we look at the stock market and the bond market. We're going to keep you updated. We thank you for taking time to watch this vlog, and we especially appreciate the fact that you have shared it with others. When we get calls or people wanting to meet with us because they've been watching our vlogs, we can't thank you enough for those introductions, and we always want this information to be beneficial for you. Have a great full week in 2019, and we're looking forward to bringing you more information. Thanks.